Hello, Warriors. Dale Pinkert here at www.tradegatehub.com. How's everyone doing today? Very quiet day. Everyone's waiting on Jackson Hole commentary from the speakers, especially Jay Powell on Friday. So we'll see what happens. I wanted to do a little bit more teaching here today than just analysis, and I want to start with the Russell. So we know that most market indices have made successive new record high after new record high after new record high. And, I have to admit that going back to last week, I thought that we had something once we took out the 14,920, which was a pretty important line support level, and it turned out to be just another false breakdown. And here we are, I think, at potentially another important top. Just be careful out there because look at this glaring divergence. So, and then I'll get back to the canary that has laryngitis, which is the Russell 2000. But, look at this RSI reading. It's the lowest one at 64, probably even lower than this peak here, 66. So it's the weakest RSI reading that the S&P has had while making a new high, going all the way back to July 21st, okay, on the daily. So we've been diverging for a long time, and these are all new highs in NASDAQ and S&P. So I'll get back to my point. So while the NASDAQ was doing this and the S&P, similar route, just a little different magnitude at times recently, because rates have been soft. The NASDAQ has been outperforming S&Ps, but you have the same kind of setup here. And in fact, the S&P is last confirmed even further back than NASDAQ. You have to go back to mid-April tax day since we had a confirmed high in the S&P. So there have been breaks, there was this, in May, and then you had a little June sell-off, and then the July sell-off, and then it looked like maybe this was it. Well, I'm telling you, one of these is going to break. You could probably just use something so simple. And, I believe in simple, because if it gets too complex and you're using a million different things and you're waiting for them all to line up and confirm, you're going to end up with paralysis, because there really isn't anything such as the perfect trade. There are higher and lower probability trades. So anyway, you could probably use something so simple like a 50-day moving average, close on a daily underneath this moving average, and don't be long anymore. Okay, so again, getting back to the Russell. So you saw those successive new highs, and these are made up of regional banks and mainly domestic, totally domestic U.S. companies here. And I was actually not accurate. Well, this was the last high. It was in March. Okay, so long time with an attempt to make a new high, a great attempt to make new high, but it didn't. Another attempt to make new highs, an attempt to break down, and the recent rally has even been weaker. And we have another bounce off this support level. So, I think you could call it some type of distribution top, and the signal would be a breakdown under 208 closing on a day. And then at a minimum, you have 22 points, which could take you to like 186. But I just don't buy that this is, consolidation, and it's given people this much time to get long, with the rest of the market becoming parabolic. So this might even be a significant, the highs for the week in Russell, and also near the breakdown of the rectangle. And, you could probably start calling it a descending triangle, as if lows highs begin to put in lower highs and break down. So here's your formation. You could call it a rectangle, distribution top. From here, if you just take it from here, and you could kind of do that on the daily, you could have what's called a descending triangle, which is also a reversal formation. And that would probably be something like this, where we're not going to take out last week's highs. That's where there would be a chance for a final thrust to the upside, but I'm thinking this might be it today. So watch this video here. Also, because some of the other indexes are at Fibonacci targets, 14,350 I talked about, in NASDAQ once I knew there was going to be another run, and S&P's, pretty close to that 4,500, and with non-confirmations and a lot of time frames. So anyway, here's your lesson on a distribution top. Markets do not consolidate for this long. Okay, because think about it. Think about how much time you've had to accumulate, and think about the sentiment in the market. Sentiment's pretty bullish, so you're not going to be shorting any kind of stock. In fact, the only kind of movement that you've had in the market is no one wants to be out of stock, so they rotate sector to sector. Well, the Russell has gotten very little love since the spring, and just keep your eye on that blue line, and under 208. I think the Russell has been signaling, probably to your disadvantage. Sometimes it helps to be naive, but if you were watching the Russell, it was probably pretty hard to stay long during this melt up that we've had in the S&Ps and NASDAQ. So that's the first thing I wanted to talk about, was a canary in the coal mine that's been singing for 5-6 months. It probably has some laryngitis from tweeting or chirping all this time. So we'll see what happens. If the Russell's going to turn good, it better do it soon. Otherwise, it's just another failing rally. Let's get back to the dollar, which, I was on the right side of it from last week, both ways. Talked about it making one more new high over the double top that I didn't think would stand at 93.20. I was talking 350. We got to 78. And then yesterday, after we talked, we negated the breakout. So now, as long as the dollar stays back under 93.20 on a closing basis, you have a failed breakout. So it's very possible that this is at least a short-term high. I think that there could be a pullback all the way towards 92 to 91. So I wouldn't short it in the hole here. Let's see what it does on some kind of rally, maybe 61.8. So we could intraday or even for a day close over this, but this showed some inherent weakness because it took so much time for it just to break out, and to give it back in a matter of days, even though it's August, is not a real positive sign. So I'd be looking to sell rallies, buy breaks in euro. Euro's just stalling up here at this pivot that we've seen so many times, the 1750. So last week I talked about that there's a buy zone in euro around the 1680 level. We got down to 1660, and here we are knocking on the door. So we get back through this 1750 level. You're going to be talking about taking out this high. So there are, I would imagine, quite a few stops above this high. And I actually think before the dollar correction runs its path that they're going to go for buy stops here and buy stops here. So what could we learn technically about the euro dollar besides trying to forecast direction? And so, if we had a pullback towards 117s, some type of, ABC pullback, I'd be buying breaks in the euro, because I still think EG looks all right, even though we're, getting some type of short-term high, or may have some type of ABC, but euro remains my preferred long for being short the dollar. So maybe a pullback towards 117, and then the next time through we're good. But what kind of formation do you think we have here? Anyone want to guess in the house what we're looking at here in the euro? Okay, so I could anchor it off this high but I'd rather have more of a descent. This was a pretty key high. So let's just anchor our line there and look at this wedge. Okay, so we have a breakout of the falling wedge, and it could pull back to the breakout line like I was talking about at the 117 level. Then maybe risk 50 pips to see if the lows hold. But to me, this is a falling wedge. Now, what is the rule on wedges? How much can they retrace? So if this is a wedge, well, you don't want to see the weather. If this is a wedge I'm working with and it's off a 4-hour chart, I'm looking for 100% retracement that would take it up to these levels. I'm sure I could find a larger degree wedge. Here's how it looks at the bottom. And it was pretty clean looking here, right? So nice little wedge. And what happens in wedges is that, what happens in wedges is that you end up with sometimes 3 dry formations. And yeah, 3 dry formations and divergences occurring at the same time. So let me just get this drawn and we'll just do a quick run through on my RSI work, okay? So basically this was a wedge here. Let's get some, get the RSI up here. Huh. I don't know what happened with the RSI. I think there's something here. All right, so let's work without the RSI. Anyway, trust me, there was divergence underneath it. I don't know, I must have clicked it off. But let's just look at a naked chart, really no indicators. And a wedge, falling wedge, is a reversal formation. So when you see this starting to develop, you know that there's a possibility for a turn. And here's the breakout. And normally you're going to get lots of divergences. And so this wedge is still valid on one test if you pulled back to 1710 or so before we launched. And I would say this would be my target. It's going to abort under 1650. So you know, that's your risk on the trade. If you buy a break towards 117, about 60 pips you could give it. And the potential upside is, I think, pretty nice once we get through this 1750 level. Then we have a couple of moving averages that come in here. And this is, you know, where I said we could take out these stops because here's a moving average above them. And then to take out these stops and maybe rally between 119 and 120 before the dollar reasserts itself. So that's the way I'm looking at euro. Still trying to figure that out. Okay. Cable. Cable's, you know, acted pretty lousy last week, although it held this. You know, I'm not bearish. I'm not going to get short cable here, but my preferred long is euro. I think it has a better looking chart coming out of a wedge than the pound just getting back down to major support. And, you know, EG has been in a little minor uptrend for the last week or so, you know, every pullback holding where it has to here, and then kind of a breakout over 540. So this makes the euro my preferred long. Aussie getting a nice little pop here, but we did not, we confirmed these lows in Aussie, so I'm going to just, this could be, if anything, maybe a short candidate for another low. And I do want to talk about the gold. So, you know, the gold, really this recovery has me convinced that this is going to turn out to be a significant low. So did I buy it here? No, it took until I saw there was really no selling pressure up here at the breakdown. Remember, this was a key underneath another rectangle. So let's do a little teaching. Let's see what can happen after a rectangle. And the gold was in that rectangle for quite some time. Let's see in the daily. Yeah, we were trading in this rectangle for about 2 months. So when you look at that rectangle um, right here before a breakdown, keep that in mind as I'm talking about an even longer term rectangle in the Russell, right? Rectangle. So breakdown, and you didn't have to get short the gold until it broke down. So I do believe gold is bottom. I'm going to let this rally play out in gold up here. Could even have another 20 bucks, try 1830. And then I'll wait for a wave two pullback. Best guess, I think 1740, 1750. And you know what? A lot of people will ask me, and this is has something to do with psychology. And, I'm going to wrap it on this. But say we get to this target at 1830, and I don't want to chase it there, but I want to be a buyer at 1750. And I want to ask you, everyone who's watching it, ask yourself if you've done this, because I have. I've seen several hundred people trade over the years, teaching, being involved in um, mentoring and facilitating trading rooms. So say we're up here and you'll say, well, Dale, if you think you could buy it at 1750, why don't you just short it up here and ride it down and make some money into your buy point? You know why? Because just because I want to be a buyer down here on the pullback doesn't mean it's going to happen. We can move sideways and then blow to the upside. So really, because you have a trade and an entry idea for a trade, doesn't mean that you should trade it in that direction, believing that your entry is going to manifest. And I used to do that, and that's when you have a little bit of hubris and you're very confident, but that's not the trade. The trade isn't to short it for a pullback to 1750. The trade is I want to be a buyer after the pullback. So just a little psychology. It'll save you some aggravation and money if you don't do that. And I know it's tempting because you really believe you're going to have a chance to buy it here at 1750. But again, the point is that's not the trade. The trade is the buy at 1750, not, well, it's going to peak here and go to 1750, because it may or may not. So your idea is here, not up here to ride it down to 1750. And I'll tell you, I've done it, oh gosh, so many times I need a calculator. All right. So I want you to save you guys some heartache, and you don't have to trade the market in both directions and catch every wiggle, every wave. I have good technical reasons for a 1750, 1740. And that's the trade, the buy there, not the sell and ride it down so I have more money to load up on gold longs down there. Are you with me? Do you understand that? And have you done that before? Okay, so write this down. When I have an entry, on a market, I'm not going to trade it counter to that entry. I'm going to be patient and wait for it, because that's the trade. Okay, so everyone, have a great trading day. I'm looking at potentially trying to scalp on a turnaround Tuesday. I'd like to see the S&Ps try one more high, and the Nasdaq too. Nasdaq's actually acting weaker, and you could go back on some videos, and when I knew I was wrong, I said, well, 15,350 is the next count. Here we are. We got to a high of 80, I believe, 15,388. So let's see, it's only Tuesday. I think it's going to take a lot of downside action to get some type of 2-week reversal. Write the number down. It's possible. 15,132 by Friday's close would be a 2-week reversal. So everyone have a great day trading. I invite you all to come to TradeGate Hub and work with me and the other traders in there and post your stuff, ask questions, learn. I'm willing to share what I know. And what good is anything, even trading knowledge, until it's shared with another? The mission at tradegatehub.com is to build up and edify traders every day. I hope that we're adding value to what you're trying to accomplish in a very difficult endeavor, speculating in the markets. Be careful out there and don't just count your pips, count your blessings. We'll see you tomorrow and see what develops, and pay attention to that canary that can't sing as loud anymore because he's been giving a concert for 5 months. Adios, everyone. Good hunting. See you tomorrow.